Okay, guys,
Yeah, I'm
another
just going to
good,
release it.
another good. As you know, guys, most of the time when I analyze, I start on the what you call, I start on the bigger time frame. So I started on the what? I started on the monthly, and this is DXY. So this being DXY, I'll first highlight my highest side and then highlight my what? My lowest low. So we do this using a what? Horizontal ray. As you can see, I highlighted my higher height. Okay, and then now I have to highlight my what? My lower low. So after highlighting my higher height and my lower low from the weekly, I'll be highlighting important zones. We have what we call important zones. Important zones, that's levels where the market made a turn. It can be a level where price, as long as price did something, we call that a what? An important zone. So as you could see now, we're gonna be having this one here where price did what? Price reversed. That's the first zone that I'm gonna have. So from here, guys, I don't like starting the trend lines on the bigger scale, which is the monthly. I prefer to go to the what? To the weekly. So on the weekly time frame, I'll just zoom in the market. And then again, guys, you could see that here it was a what? There was a zone. So this zone was broken. You understand? Sometimes support turns into resistance, even though we hardly use them. And again, we have what? We have an important level. Where is an important level? This is an important level here. You understand, guys? So from the weekly, we'll head to the what? To the daily, but then I'm left with one important level that has to be the highest height of everything. So now I'm going to move from the weekly to the what? To the daily. So based on the daily, this is how we see price. So just zoom in. So as you can see, guys, here, we have enough touches for me to draw trend lines. Those are the touches that I had. I have more than 2 to 3 touches. That's what's important most of the time. Again, I'll take this one from that level. And the situation when it's like this is like price gave you what? A breakout. So now from the daily, guys, we have to move to the what? To the 4 hour. As we go to the 4 hour, we could see how price is standing up. Guys. If you were to check, we can fix there and there. Understand? If you were to check, if you really know your strategy, you could see that here, what really happened, it's break and retest. Again, if you know your stuff, you can call it impulse correction, then what? Then impulse. So I'm just gonna push the trainer so that my touches make sense. First touch, second touch, and what? And third touch. You see, guys, we have first, second, on the third touch, there was a what? There was a breakout. Again, we can say we are having an inverse head and shoulder where this is the left shoulder, this is the right shoulder, and this is the head. Now we're gonna analyze the what? Now we're gonna analyze the correction. As you can see, 1, 2, 3. That's the reason why price did what it did. So again, guys, as you can see that I have a what? I have a breakout here. Price was like this before, and then perfect. There was a what? There was a breakout. So if I wanna adjust this trend line and I feel like it's not in a proper way, it's not wrong to even do this. Then the time I do this, I'm going to be having what? A zone, which is gonna be this one here. Where likely nothing really happened. And yeah, it can be like that. So guys, after you have a move like this, what do you expect? Do you expect price to go down? Do you expect price to go up? Do you expect price to do what? What are we expecting here, guys?
Ready to go up.
Price to go up. Why? Because most of the time, you check when we are trading, most impulse, correction, impulse. That's it. That's how you need to have everything. You could see the first gave you here. Someone just joined, guys, and they're making nice. I don't know who is it. So again, you can use this tool, the bar pattern. You take the bar pattern and then put it aside. You'll understand what I'm really saying there. Okay, after price gave you an impulse, it has to give you a correction. After a correction, you're gonna be heading to the what? To the impulse. So is there anyone who has a question so far? Any questions so far?
So in this session, are you gonna touch on entries?
When you ask the question you're asking now, it's not relevant to what I've just asked. Because I'm still gonna go down to this thing. I'm not done yet. That's why I'm asking so far. Is there anyone who has a question? Because I'm not done analyzing. I'm still in the process of analyzing. Obvious, I'll show you how I'll enter it. The question was like, do you guys understand till this point? So yes or no question.
Oh wait, man, I understand.
At least you do. So now I'll move to the what? To the 1 hour. So based on the 1 hour, I'll zoom price, and then price is like this. So what I can do is fix my trend, because trend lines being trend lines. So okay, it's fine. You can see the touches are clear. And then here I'll push my thing here. Remember guys, we have two types of entries. What are the types of entries that we have? Two types of entries that we have.
Risk entry and gosh, I can't
Reduce
remember.
risk.
Risk entry and reduced risk entry.
Okay.
Okay, we're gonna look at this level, right? First entry was supposed to be here, and then price gave you an impulse. This is a correction here. So this was going to be the what? This was going to be the second entry. So starting from there, let's say if we were to look at it, let's say you take a position here, right? You're gonna take a position there, and then remember, always have a tight stop loss. Stop loss is the best. Stop loss is the best. So we were gonna have this one like this. So if you entered this one based on what I've analyzed previously, you could have had this as your what? As your first entry. And then second entry, which is interesting, guys, is the 1, 2, 3. If you find people saying 1, 2, 3 doesn't work, they don't know how to use it. Let's check. This is the first touch, right? This is the second touch, right? And then this is the third touch. So based on this, I'll be now having my what? Second entry. And how did I take my second entry? I took my second entry based on simple strategy 1, 2, 3, and it worked out. You know, it seems easy when I do it like this. When you're alone, you guys been seeing things. You don't see whatever I say. So this will be your what? Second entry. So now we're looking for the what? For the third entry. Like the advantage of trading trend lines is I can have as many entries as I want. So now we have 1 and 2. Perfect. And then now I'll come to the low. And on the low, still 1, 2. So if price doesn't break this level, we're still looking for what? Buying opportunities. So this is what might happen. 1, 2. We're left with what? We are left with the third touch. So now we need a what? We need a third touch. So I'll come, take my take my brush, and then I think price can like move, and then we touch that level, we come down, and then entry, boom, to the upside. I'm not using a mouse, so don't mind whatever I'm drawing here. But as long as you guys can understand. So here we could say we are having a what? Another entry. So the entry will be based on here. The entry will be based on that level. If price doesn't do what you wanted it to do, don't involve yourself. They say plan the trade and trade the plan. This is how I plan my trade. And this is how I'll do what trade my plan. Understand? It's better to lose or rather like lose making money in the market than going in with setups that I'm not even sure about. You get what I'm saying, guys? So we're gonna look at the next highest or nearest zone. This is the next or highest nearest zone. So I'll put a what horizontal ray here. Okay, let's do this. This is the nearest zone. So if we were to buy, that's where I'll take my what? Take profit. Did you guys understand?
Yeah, goat.
Away,
Anyone?
Manando.
Yes, we do.
We have to simplify this trading thing. Trading doesn't have to be simple. If you can just follow the procedure, trust me, you're sorted. Understand? You just follow the simple things. I prefer a mentorship over what you call. I prefer mentorship over this thing, signals, because signals. Here's how signals works. Signals, you're trained to become someone's, I can say someone's slave or whatever. Like if that person dies, you can never have the skill to continue, you know. But then like if you have the skill yourself, you know that you don't need Manando the goat, you understand, for you to trade. You can like only need you and you only. So that's what I'm saying, like you need to follow mentorship rather than buying signals, you know. So that's just an advice from me. So okay, now from the M15, from the 1 hour, let's go to the king time frame. I call this one the king time frame because hey, a lot happens in this time frame. Just like the buyer caught for king. Was it Friday? That buy, guys. So for one position or one good entry, it can change a lot of stuff. You understand? It can like change a lot of stuff. So here, guys, you could see, as I said, we're planning the trade, and then we're gonna trade the plane. We have 1, 2, 1, 2, 1, 2. So price, it doesn't have to disappoint us. Price has to go there. See that touch, and then after price goes for the third touch, we're gonna come down for the what? Third touch. After coming down for the third touch, then now we know that it's time to do what? It's time to buy. It's time to buy. So your target will be there. So a lot of time I like being on the 2 hour because 2 hours is just a good time frame for me. I can even spend time with my friends knowing that I don't have to check the market. But you guys wanna always be involved in the market. Each and every move you are there. So this is how I'm planning my trade. And if it doesn't play out like this, I'm not gonna take the setup. So guys, with DXY is everyone satisfied. But then you need to at least have a question, gents.
I'm sharp on this.
I'm good, my G.
Okay, everyone is good.
Away.
So guys, which ones are this was the DXY? I like starting with DXY. Are you guys into indices or are you guys into what do you call or are you guys into um currency? Indices or currency?
In dice.
For me, I'm more into those currency pairs.
One thing about currencies, guys, is you can like make money trading currency, but then I feel like we now have that mentality of Nasdaq, USDT and stuff. And these things sometimes they can go to the wrong way and they can like surprise you in a bad way. You know, like a lot of time, like but then the move that you get, you just know that oh, this move might change my life, you know, because with currencies it's not easy to take small account to big account. But then with what do you call but with indices you can take 1,000 to 10,000 just like that.
Yeah, but it's a lot of risk because the movement also involves like lot of pips. So I feel like with indexes, with indices and all that, you can't trade with like bigger lots. That wears out my accounts fast. So that's been majorly the reason why I've just decided to be on currency pairs for now. So I don't get to like for
What's
now
your
I'm not
favorite?
for me
What's your favorite currency pair?
my favorite
Yeah,
my favorite pair would be usually they are anything JPY, maybe USD JPY, NZD AUD JPY,
let's go
mostly
to
something
let's
JPY.
go to USD JPY. That's the first thing you say. USD JPY.
Okay.
Yeah. The laptop I bought is too much, guys. Yes.
So yeah, good. I feel like with currency pairs we can I still can trade with reasonable lot on those pairs, but for US 30 Nasdaq and the likes, even on small lots, like it just goes if it goes against my trade.
It's easy to hold a loss on currency. Hey, the other side is not easy, Chief. Holding a loss on Nasdaq, it's like you're admitted. So there's like a lot of time when I trade back this. Okay, so now we are on UJ.
USD JPY, yes.
Why is this UJ like this? Now let me search for the USDG for this one. What's up? Are you guys close to being consistent? Are you guys close to being consistent? Because consistency is the state of mind.
Mm-hmm.
So once you see it, you can never unsee it. Like, okay, so yeah, let's not waste time. We're gonna start on the weekly. We don't need to go to the what do you call monthly?
Okay.
No, this week I wanna target a lot. So as you guys know, higher high and what lower low. That's the higher high, and this is the lower low from what we see. Then we have an important level, which it's here. We're gonna take it as a what as a zone. So as I said, I don't like is this some background? Someone mute their mic or maybe as you see guys now so as you can see from the daily there's a what the E is a breakout and then what's done on the higher height has to also be done on the hey someone is making this not for us guys who's the person
I think someone's speakers is on.
um, who is it so I can remove because I can't work like this and it will be unfair to remove someone but then sometimes we have to get down to business. So okay, it's fine. The night anymore. So from the what do you call guys? Uh, still equal. Let me check. Shop. It's Kamu. I'm removing Kamu. You'll join next time, Kamu, when you.
My apology.
So okay, guys, as you could see, now we're gonna go to the what? But then there's an interesting rejection. Do you know point of rejection, guys? This is what we call point of rejection. Look at this candlestick. So this is where macro strategy gets in. You see this level is a powerful level. And if you look at the candlestick, there's a bit of a rejection on the candlestick. Is it clear to everyone?
Yes.
So from the day
Yes.
we move to the what? To the 4 hour. So on the 4 hour, you see that the level we had, which I said, it's Marcos, it's an important level. Look at what price did to this level. So now we're gonna adapt to another strategy. We take the bar pattern, we take the height of what happened, the height to the low, and then that's what happened. We come to the current market, we put it like this. And what setup are you having here, guys? What setup are you having? I need answers. What setup are you having? Anyone to answer this one, guys? What setup are you having now?
Isn't it head and shoulders?
Yeah, symmetry.
Yeah, the one who said head and shoulder, you're correct there. So you see, based on what happened previously, there's your what? There's your head and shoulder setup. What more do you want when you can do these, guys? Huh? What more do you want if you can do this? Once you see these things, you can never unsee them. Trust me. On that part, it can never, it can never, it can never. Like there's no way you can like unsee it. I've seen it before. You understand? I've seen strategies coming and going. Like I can even read a book about I've seen. But trend line remains, you know. So as an individual, if you are in a phase where you want to change a strategy, it means there's something wrong you're doing. Is it clear, guys? Because truly speaking, a strategy is something which, as an individual, you know that okay, if I stick to this strategy, this is what might happen. You get what I'm saying, guys? If you stick to this is what might happen. But when not today there's trend lines, you run to trend lines. Tomorrow there's SMC, you run to SMC. Next week there's what you run to what. Do you think as a trader there will you upgrade or like you remain in the same place? Because when you go to the other side, you need to start down. You have to adapt to the strategy. There's a lot of things that has to happen in that strategy. You just got there, you know. I can never run to SMC, guys. I don't want to lie. Me running to SMC means I've deceived a lot of people because you guys paid for the strategy I use. Next thing I'm using SMC. It means the strategy was never consistent. We can continue now. Okay, so I'll be removing this head and shoulder because you can see it's there. Or anyone with a question so far?
Oh, yeah. How did you that yellow thing? This
The one
how
that
did you do it?
okay, so this is called what do you call it? It's called a bar pattern. So a bar pattern, it allows you to take the history into the future. You understand? So you get it on
Sure.
your free platform. If you're using TradingView, just go look on the tool, something called a bar pattern. Then yeah, you can kill it with the bar pattern.
It was bad.
Away, Chaka. So now I'm gonna go to the 1 hour, right, guys? So on the 1 hour, you need to see a little bit of rejection. You know, guys, now I have a laptop. We can zoom each and every day until you guys get this thing into your mind. So here's the 1 hour. On the 1 hour, we have the low of everything. This is the low of everything. So as you could see, as I said, and as I stated, we already have the past, what do you call past setup. This side is already completed, you know. And if you can check, how did price come down? Did price come in a form, in a formation of an impulse, or price came down in a form of a correction?
Came down in the form of a correction.
Like, remember, a correction is when price moves sideways. An impulse is when price moves one direction. So did price come down in an inverse, in an impulse or correction? Look at it again. Take your time. How did price drop?
Impulsively.
It dropped impulsively. So now a price dropped impulsively. We can say we had a mini setup, which you could have done. You understand? There at top, you could see you have 1, 2, 3 touches. This thing, it will show nicely when we go to the what M15. So you had a what? You had this breakout here. So when you have that breakout, so now you're gonna go back to my favorite tool, bar pattern. I'll take the sideways of the market. Remember, price keeps repeating itself. So I'll just do this. You see? So when I do that, I took that, and then when I come, I'll put it here. There are like many ways on how to like catch a fish. Understand, guys? There are many ways. The best thing is we all gonna reach the same place, even though we do different things. Is everything clear, guys? Because remember, what they say is the market keeps repeating itself. So in each and every time frame, I just get one thing: head and shoulders setup. Again, here it's the M1. Again on the is the H1, and again on the H1, we still have the what same thing. Where we have the what impulse, and this is the shoulder, and again these, and then there, and then there. Is it clear to everyone?
Sure.
Yes. Not really.
No way.
Someone said not really.
Yes, I said not really.
Okay, what is it? What is it that you don't understand?
Now I'm confused from the breakout, because for me, I thought the breakout was the impulse. I thought that the breakout there was the impulse.
The drop, yes, it's an impulse. Going down, we went down in an impulse wave. You understand? When we went down with an impulse phase. But then if we go to now we're gonna go to the M15. I wanna show you something. On the M15, based on the current structure, you're gonna go get a correction, which is going to be I call it the mini correction. You'll see it because it still has to be formed. But then coming down our line, we came down in an impulse way.
Okay.
You understand? This one, it's already there. It's already there. So now I just have to remove what I did there. So we're gonna change time frame. So now we're going to the what? We are going to the, even if I were to show you in a different format, let me give you another scenario on trend lines. So let's say we were to take a trend line from there to that level. Is that not a breakout?
It is.
It is. So whenever you have a break, it changes trend. So now we have what? Change trend. So that's how I have it, So we can adjust these, what do you call? We can adjust these level. Yeah, it's in the right place. So you see how it went. So now I'll go to the gold time frame, M15 entry time frame. So this is the entry time frame. As I said, on the M15, we're gonna go get a what? A correction. And there, this is a what? A correction. Impulse, and then you can have your correction there. So now you know what you have. You have what? Impulse, correction, impulse. So this is how it is here. You can have these correction. It's even the M30. I'll go to the M15. It didn't say it, and then the M15, it will show something bigger. So let's go to the M15. So you see that on the M15, the correction, it's there. So how can we measure the next move? We're gonna take the impulse of the previous price and put it into the current market. I hope I make sense. You're gonna come to your bar pattern. Where's your bar pattern? Here's your bar pattern. You're gonna take these impulse to there, and then you come with your bar pattern. You put it there. You understand? So if you were to sell, already you have a target. Your take profit number one is determined based on what happened previously. You understand?
Okay.
So there, I just use this impulse here. You see, I use this impulse to give me the where price can go. And if you can check again to show that these things work, this was an impulse, and then you had a correctional phase. You understand? So here having a correctional phase, you see where price went? Price went for an impulse. So now the problem price created a correction there and it gives you an impulse to drop. So guys, price keep moving in the same way. It can never change just to accommodate me. It can never change to accommodate you. Even here, guys, there are a lot of impulse. Like this thing has been moving like almost the same way. Understand? We can't really say the same, but almost. Because you see, price is just giving you impulse correction, impulse. Guys, I bet this is the easiest strategy that one can have or one can understand. So I have to highlight something. All right, so here we're gonna be having a what? A short. So you can take your trade from that level, and then your TP has to be seen. Understand? Your TP has to be seen. What do I mean when I say your TP has to be seen? Like you need to show because we just used the previous one. So we're gonna go to the 1 hour. So guys, if you're relaxed, 1 hour, 2 hours, the best time frame to do whatever you wanna do. So this is how you have your what, your setup. So did everyone understand?
Oh wait.
Yes.
Sure.
If you have a question, it's not personal, it's chat. Understand, guys, it's chat. If we don't kill the chats, who's gonna kill the chats?
Manando the goats will.
You know, my brother. You know, let's make money, guys. Let's make money. See, if you make money, trust me. Trust me, over to you, go. So, guys, the Zoom session is left with like I think 4 minutes. Yeah, I can do another one. So, which pair can we do? Last pair that we can do, because we had limited time.
Can do USD.
Gold.
Well,
Why don't give me a signal for the week?
on gold. Miss Gold, it's XAU USD.
Yes.
Yeah, here's your gold, guys. We're gonna start from the weekly. Try as fast as I can till I have it. So this is gold, man. Damn. So on the weekly time frame, guys, let's focus on what we see. You're gonna focus on the current stuff. So this was the highest height. And then this is the lowest low of the current market, right? So we're gonna be having what you call a zone, as I said. That's why macro strategy comes in a lot of time. So we had this zone here where price did what? Price retraced. So from the weekly, I'm gonna head to the what? To the daily. So on the daily time frame, on the daily time
Before you pay.
yeah.
How to spot you on there then? A zone you be telling it.
A zone is where price rejected for the last time. If you can check price, ne, last time I feel more price.
Sure.
Rejected. So price, it was almost on the same level. Rejected. So how price reject the ile ko kai I'll come, sorry for the language, guys. I'll come with the bar pattern. Again, I'll take it from here and then go down. So this is basically what happens. So if I were to come and put it there, you see it reaches the setup the way I want it. Head and shoulder setup, head, left shoulder, right shoulder, price went down. So that's the important, like the most important thing to do is like knowing the zones.
Oh, away.
Answer you in a good way.
Sure, I go to away.
Well, so let's look at it. If I were to say I can take a trend line from the low going up, there is a break, right? Simple strategy. So when there's a break, we're gonna come here again. Nice touches, 1, 2, 3, have more than 3 touches. So now we're gonna go to the 4 hour. So on the 4 hour, we have what we call a correction. So we need to be careful with this correction. But first, I'm gonna start here. What did price do? Price went down, impulse, and then it gave you a mini correction here. You'll see it when I go to the M15. And then the one which was more visible is this one. So this is what we call a reduced risk entry. And then the one at top, that's what we call a risk entry. A reduced risk entry is when you're entering a position with almost what you call a confirmation. The risk entry is when you don't have a confirmation at all, just like pet touches. Pet touches, a lot of times, though, we call them what? Risk entries. Because you're not sure, but then they tend to follow our lead a lot of time. Just like here, before price went down, guys, you can analyze that part. There was what? There is a correction here. There is a correction there. There is a correction there. Okay, I'm just gonna do this. There is